Hey there, and good afternoon, everyone. This is Trader Tim from eMiniMind, and we're doing a Monday market analysis video. I apologize, Friday's video got chopped off about halfway through, so I'll review some of that material and then talk about the week ahead here in the markets. If we start off with the daily chart and we zoom out a little bit, you can see this nice upward channel that we've been in, first going from bottom to top, repeatedly bottom to top, and now just sort of staying in the middle of the channel and the top half of the channel. So going from middle to top, middle to top. And now as we stand here, we are kind of just right on top of those January highs. And we came down close to the 50% retracement just using this prior swing low to high. I didn't quite touch it. In Friday's video, I was talking about a break of the prior day's high would be a substantial break in trend, meaning we've broken the prior day's, we have not broken the prior day's high the entire way down. And so doing that would be a very bullish sign. And we got that break today on a gap up nonetheless, and closing the day now with a bearish candle, but still breaking Friday's high is significant. If we come over and look at some individual names, you know, the SPY here breaking the prior candle's high. If we come over to what do I want to look at? ABT, you know, same thing. We have a pullback, a hammer, and then when we break that hammer's high, the high of the low bar, that sort of initiates the upward trend. Down here, the trend is down, and then we start to move up when we break the high of the low bar. So just using a buy stop, you know, a few cents above highs is the way I like to get in on some of these daily swing trades. The other thing I wanted to point out from this chart that we can then apply to the ES is see how we have two pullbacks. The market made a high here. We pulled back, we bounced and put in a lower high, and then we pulled back again. A lot of times you get a two-step pullback. And so in this pullback here, the hammer being the first one, we bounced. We may roll over and pull back a little bit deeper. And so that's just something to keep an eye out. If we look at some of the bigger names, not everything is really trending in the same way. We've got Google selling off, and then we have Apple also in a deeper pullback. If we go to Amazon, also pulling back on some decent volume. Netflix is well off its highs, although starting to turn around in that this swing high over here was broken and could it be potentially putting in a higher low. Home Depot is looking really good. Here's another example where we had a high, we pulled back, we broke above the high of the low bar and bounced, and then pulled back a second time and then rallied from there. So if we come back to the, well, let's SPY, let's take a look at the Dow, very sideways. The Russell also pretty sideways, and then the NASDAQ a little bit deeper pullback. So the SPY is actually, you know, looking somewhat of the best out of those. NASDAQ looking decent, but mixed signals. You can see the nice upward trend, but when we go to some of the individual stocks, they're not all breaking out. So as we come back to the daily chart then on the ES, you know, breaking today's high, breaking Friday's high today, yeah, that's a good sign. I'm not really counting this little candle up here that you see. That was the Monday of Labor Day, so there's really no volume to speak of. But the market has pulled back. We broke highs. Maybe we go a little higher and roll over and then put in sort of a second leg in the pullback. We don't always do that, but given that we didn't break Friday's high and close with a big body candle to the upside, makes me think that we may get a little more sideways action or pull back to the 2860s. But as long as we stay above the 61.8, 2848s, and especially this low from the hammer, 2803s, then the trend is intact and we're still healthy. If we break the 61.8, I'd be a little concerned if we close below that. And then if we come and break 2800s, I'd be much more concerned that we have a short-term top and trend would be reversing. So as we head into this week, let's go to the 30-minute chart. You can really see this downward channel. Kind of today was a little bit messy, but as sort of to be expected on a Monday. Going into this week, breaking highs now will need to be the new trend. If we just have an inside day tomorrow, or if we break today's low tomorrow, then I'd be looking for shorts to kind of take us down into this 50% retracement long. I want to see buyers coming in here. I want to see the market being lifted up and people looking at this price and say, well, I haven't been in prior to this, but I want to get in now. And that's going to come in a sustainable way only from the bigger institutions. So if people aren't calling their brokers and saying, hey, I want to get in the markets, and then the banks come in and put on 500,000 contract orders, then the trading that individual traders like you and I do is really meaningless. We're not trading enough contracts to really have an impact on the market. So this week may or may not be telling, but if we are inside any of the last couple of days going forward this week, I would trade pretty cautiously. But if we can break out of today's high tomorrow, then we've started a new trend of breaking new highs every day, making new highs every day, and that's a bullish sign. But first line in the sand, 2846. Second line, we'll call it 2800 since that's a big round number. And as always, Tuesdays, tomorrow morning, be doing a live trading session talking about the ES, NQ, a little bit of Dow, Forex. I'm sorry, not Forex, Euro FX, and NYSE tick breath, advanced decline line, all of those things, and we'll answer your questions there as well. So you can check that out, eminimind.com/VIP, or you can reach me, Tim@eminimind.com. Thanks everyone, and have a great week of trading.